Welcome to another weekly portfolio update here on The Last Investor. My name is Dan, and I'm going to give a brief update on my new look portfolio. This is arguably the biggest change in my portfolio since I started investing on the free trade platform. Then I'll talk about whether I'm placing all of my eggs in one basket by investing mainly into one area of innovation. But first, let's get to that portfolio update. Today, I'm going to look at the top movers, which means the top gains and top losses in my portfolio. First one I'm going to look at is Carnival Corp. In the last 7 days, Carnival Corp has gone up 21.68%, and that puts me at a 50% loss so far on that particular investment. £595 is my current value, and I'm down £599. I honestly don't have a clue why Carnival Corp seems to have gone up 20% in the last 7 days. I mean 21.68% in fact. I really have no idea. The concerns that existed last week remain the case. They're not due to start sailing until the end of December. Cash burn is still around 1 billion a quarter, so I really don't know why there is such an optimism in relation to that share, but anyway, I'll keep my eyes peeled out for any news if that comes out. Then my next mover is Editas. In the last 7 days, Editas is up 11%, currently up overall 13.54%. My current value is £926 with a gain of £110. And Editas is one of those shares I've just gone big on. It's one of those biotechnological firms that I've invested in big this time round. And it's reported its earnings, but I don't think that's been the main reason why it's gone up so much. It beats on both its EPS and its revenue. But as I said, I don't think that's the reason why it's gone up by so much. I think what really has caused it to go up a bit more is because of a rumor of a merger or acquisition, which is currently in the offing between Editas and Beam Therapeutics. Beam Therapeutics is another biogenetic company working on curing serious diseases with a different type of technology called base editing. So anyway, we'll have to watch out for that space and see if that merger or acquisition comes off, and we'll see where that goes from then. But other than that, no other specific reason why the stock seems to have gone up. Again, any move in the share price in the very short term is not really material for me. I think we have to look at it from where this company is currently at the moment. It's still at the pre-clinical trial stages, so any significant change in its share price is going to come once it's been able to have successful trials and then moved on from successful trials to actually getting FDA approval, and then moving on from FDA approval to be actually producing a viable drug in the market, which I think it's very likely that that's going to happen. I say very, very likely. I honestly have no idea. But the signs, especially when you look at what CRISPR Therapeutics have done, given that they've already had a successful trial and someone has already been free following use of their drug, I think these are all drugs using the same technology, and it's very likely that they would all have similar successes in terms of moving from preclinical trials to actual full FDA approval. So that's where it's going. So, and that's where my focus is on. My focus is on the long term rather than any short term movements in these particular stocks. So really just to give some context around that. Then the next mover is Aviva. And Aviva has recently gone up in the last 7 days at 7%. So currently my value stands at £836. It's still down overall at 3.83%, £33 loss. But that's good for me. I think it's coming a long way, which is good. Aviva had good news because it's announced that it will be paying a dividend of 6 pence per share, and it's also had a new chief executive, Amanda Blanc, and she seems to be taking the company in the right direction, and there's a lot of positivity around the company and how it's now being run. So I think that bodes well. She's also thinking of trimming down some of the businesses. So for example, it's going to cut down on the Asia and Europe market and focus on its core business here in the UK. So that may well be a good thing, because I think those particular markets have been somewhat loss producing for them. So focusing on that industry and focusing its attention on a more profitable area is actually going to be a good thing for it going forward. I think that's quite a good thing to do, a prudent way to manage the company. So let's see how that goes. And of course, the fact that it's paying a dividend is a really big thing, and that probably must have got a lot of people chasing those dividend payments to move into the stock as well. And the other stock which has been performing well is Centamin, although in the last 7 days it seems to have gone down a bit. It actually done really well leading up to now. Obviously with the gold price soaring, it's really had an impact on the company's profitability. It announced its half-year results, and they were absolutely amazing results. Its pre-tax profits rose from 59 million last year to 191 million this year. That is incredible growth, and that really has been down to the fact that gold prices have soared all the way up to about $2,000 per ounce. The other thing is that it's also declared an interim dividend of 6 pence per share, and again, that's going to make a lot of investors very happy indeed. So all great news overall, even though the stock is currently down a bit at the moment. But I think overall it's going to do well going forward. That's for sure, off the back of that news. Now for my stocks which have seen the biggest losses, we have Invitae. Now Invitae is actually my second largest stock now. In the last 7 days, it's down 11%. And that means that overall in my investments I'm down 3.9%. I sort of caught it when it was going down, which is good, and I was able to buy into it at that stage. So overall, my current value is £966. I'm down £39 overall at the moment. Why is it down? Well, I'm not really so sure why it's down that much. It also had its half-year result, and the results were actually quite good given the state of the pandemic. I think its sample collections so far, because what Invitae does is that they collect samples and they sequence people's genes off of the samples that they collect, and their sample growth since 2015 effectively has been exponential. It's grown from like maybe 20,000 sample collections to about 140,000 sample collections, but this past quarter it's gone down from 140,000 samples collected to 120,000 samples collected. So that drop, obviously, it's not a worry for me. Pretty much everything was closed down during the pandemic, so we can't really expect it to do just as well as it's been doing in the past. But even 120,000 is still exceptional given the pandemic situation, and I can really genuinely see that going back up. That is going to be a trend that we all follow in the future. This is the future. People are going to need and demand more genetic testing as more and more solutions appear in the market, and the trend goes in the direction of people looking to understand what their genetic is, and how that can affect them in the future. These are areas that people are going to move into, and the demand is only going to grow, and Invitae is right in the heart of it. Invitae is also a company which is very keen on mergers and acquisitions. Recently announced that it's going to buy Archer DX, another company which is in the gene sequencing area, more specialized on the oncology side of things, which is of course cancer. So buying that is also expanding its armory, and that's really, really good in my view. it's heading in the right direction and it's going to do well. In my opinion, I'm very, really, really positive about this company, and in fact I may well be adding some more shares to that as well. Then the last one is Illumina, and Illumina again in the last 7 days is down 12%. Overall I'm down 10%, £97. Current value is £838, 13 pence. And this is another company which I have a lot of time for, although I think their results, their half-year results, was actually a little bit disappointing. It's one of the largest companies when it comes to manufacturing of gene editing tools and machineries that gene editing companies use, but I think it may be getting a bit complacent, and it really needs to refocus its attention because others might be stealing market shares from it. So I think that's shown in its results, and I think a lot of investors have been put off by the fact that it seems to be slowing down in its nature in terms of innovating and trying to be more cost effective when it comes to cost competitive, I think is the right word I was looking for there. In terms of trying to be more cost competitive, it's not quite getting there. And I think that hopefully the CEO has got the message and will be heading back in the right direction. But I'll be keeping an eye on that one. I still like the company. It's the largest company when it comes to genetic analysis. So I'll definitely be keeping my shares in this stock long term. I'm sure that they'll be doing the right thing going forward. So that's it for my portfolio update. So now I want to talk about whether I have been putting all of my eggs in one basket, because I've invested quite heavily into the genomics sector, and is this really a risky strategy? And these are the things I want to look at today. So what are the pros and cons? Let's explore that. Firstly, the cons. If you're not well diversified, and this is how the argument goes, there's a chance of suffering permanent capital loss if your chosen investment goes wrong. By buying multiple stocks, you're spreading the risk amongst various companies, and this is much safer than putting all your money in one stock or a few stocks in one sector. So those are the disadvantages of investing into a small number of stocks. Now, the upside is that if you are correct with your investment, then you focus your resources in such a way that you're getting the maximum return for your invested capital. And also, by focusing on a few stocks, you can dedicate more time to research those companies and learn more about them. But that is less likely to be the case if you're invested in many stocks all at the same time. You wouldn't have the specialist knowledge to be able to make informed or educated decisions about the stocks you're buying. So that's the problem with being diversified or being too diversified. It is really for those reasons that I favor investing in a few number of stocks that I'm able to follow closely. The reality is that unless you're working full time in stock investing, unless you do that as a full time job or on a full time basis, you're not going to have the time to research all the stocks you invest in, especially if you're diversified into many stocks. Warren Buffett also says that those who don't have the time are better off placing their money in an index or ETF such as the S&P 500 rather than buying individual stocks. So only those that know what they're doing should be investing in individual stocks in any event. So it's really all about your circle of competence. So this is how I really look at it. I would rather spend my time on a few number of stocks which I know very well and I understand that, and they're within my circle of competence, and I have that time to spend on researching them, following them and keeping up to date with them. I'll have a better knowledge of them. I'll have a better understanding if something changes which is outside of my expectation, and I'll be better placed to react to that. That is the reason why I would want to be restricted in the number of stocks I buy, but rather than buying 20 stocks. Now, will I really have the time to invest in those 20 stocks, to keep on top of news in relation to them, to study their financial statements, the quarterly financial statements, the yearly financial statements, would I really have a time to do that for 20 companies? It's a lot of undertaking, and these companies aren't simple either. Some of these companies are very complex. The areas they invested in, the areas that they're based in, is also very complex. So to simply think that you could buy 20 stocks and understand them and know what you're doing, it's not realistic in my personal view. Of course, everyone is entitled to make decisions on the basis of on how they feel comfortable. That is up to every individual. And of course, I'm not here to give financial advice to anyone on how they should invest their money. That's not what this is for. But really, this is just for me to share how I make my own decisions and what my thought processes are and what I do to make those decisions about what I invest in. So having said all that, in any event, I don't think I'm undiversified. I don't think I'm not that diversified, because as you can see, I'm invested in Rio Tinto, which is a mining stock, is a stock in the iron ore mining sector. It's one of the largest mining stocks in the country, in the world, and that in itself is very different from the gene editing sector. So there is some diversification there. Aviva, that's a company which is obviously involved in the financial sector. It's involved in insurance. Again, very different from the mining sector, and also very different from the genomic sector. So again, a bit of diversification there. Centamin is the same thing as a gold mining stock, actually very diversified, very different from even iron ore mining companies. So again, there's some diversification there, and the rest, I don't really need to say too much about that. But as I said, those are a handful of stocks which I've invested in, and there's still some diversification there amongst those stocks as well. So I think that there is a sufficient amount of diversification there for me to be satisfied with what I'm doing. And I hope that gives you some insight into my thinking and why I've decided to take this particular route. But the benefit here as well is that I've also concentrated roughly about half of the value of my portfolio in those genomic sectors. And if they really do well, and if my thesis is correct, then I stand to benefit significantly from that. So I know that they're within my cycle of competency as best as I can, based on what I know and based on the research that I've carried out. And it may not necessarily be the best. I'm sure there are a lot more people out there who know far more than I do in this area. But based on what I've researched, I feel that this is the future of healthcare going forward, and I want to be there at this stage to be able to capture that. So I hope you've enjoyed this video. Of course, like, comment and subscribe. Take care. Peace.